Today, I want to take a closer look at two stocks that are going to benefit dramatically with this AI infrastructure build out, and that's going to be CoreWeave and Nebius. Both are very popular in the AI space. Both seem to have a nice partnership with NVIDIA. Both are building out massive AI infrastructures thanks to kind of this AI massive market that we're in right now. But is there a clear winner between the two? Let's take a closer look in today's episode. Comparing the two, we're going to look at a lot of things. First, obviously, financial numbers, but we're also going to look at recent transcripts and recent discussions about the future of both these players. And a lot of these charts that you're going to see are all possible via fiscal.ai. If you are a long-term investor and you're not using fiscal.ai, I'm going to say something may be wrong with you, but luckily I can help you out. Make sure to use my special code fiscal.ai/Jose for 15% off. You're going to see throughout this episode, all these charts are amazing. So first, I kind of want to start off with just the market cap, right? Both different sizes. CoreWeave right now is sitting at about $46 billion, and Nebius right now is sitting about $16 billion. Throughout this episode, we're going to see how different kind of things like their overall AI infrastructure build out is at the moment, how much of a capital expenditure they're expected to see, revenue growth also for the upcoming years. So it's going to be understandable why the difference in price. So both have done really well for investors. CoreWeave right now, even with the massive pull down over 50% from its all-time highs, the stock is still giving investors 121% year to date. Nebius is very similar, doing about 110% year to date. So either or, one has been a little bit more volatile, and unfortunately, if you bought at the top, you're kind of losing out here on CoreWeave. But for long-term investors, we can see that both are performing really well. And the main thing, right, just on the top level approach is the AI market is just in early innings, and we're going to continue to see massive build outs in AI infrastructure. Now, I want to look at forward EV to sales ratio, and I do believe this is probably the better indication. And for those that are not familiar, forward EV to sales ratio looks at the current enterprise value, which does include debt. And we do know that CoreWeave has a lot of debt. So it does kind of include that in this valuation already, which makes it, in my opinion, a little bit more comparable when comparing it to Nebius, who maybe might not have as much debt right now. And that's something we're going to talk about. And forward EV sales is looking at the next 12 months of revenue projection. So one thing that I've talked about in the past is CoreWeave and Nebius, when even since IPO, have really much traded very similar in forward price to sales ratio. Recently, though, that has changed dramatically. CoreWeave is sitting at about 7.2. Nebius is sitting at 14.3, almost a 100% difference here in valuation, making CoreWeave a lot cheaper. Now, I want to kind of look at total revenues for the upcoming year, right? So here from these charts, the ones with the ER estimates and the overall consensus from analysts right now, by June 26th, estimated revenues are expected to be $2.8 billion for CoreWeave on a quarterly basis. If we look for Nebius by the same time frame, we can see that it's expected to be roughly $333 million. So you see a huge change or a huge gap between revenue projection by both these players. Now, obviously, because of this is why you see that market cap growth different. So that's the first point I wanted to make sure. Why they're different market cap. Why is CoreWeave bigger? Well, obviously, CoreWeave is bigger because they're expected to make a lot more revenue than Nebius in the upcoming year. Now, another thing that I want to kind of talk about is overall debt. So right now, CoreWeave has a lot of debt, $7.4 billion. Nebius, for a long time, was pretty much clean in terms of balance sheet. But this most recent quarter, it jumped from a pretty clean balance sheet to almost $1 billion in long-term debt. The main reason is AI infrastructure is pretty expensive. And I want to say most bulls for Nebius at the moment are saying that CoreWeave's Nebius financials are going to stay very clean. I personally believe that's going to change. I don't think they're going to look like CoreWeave anytime soon, But I think throughout the upcoming quarters, as they build out more AI infrastructure, you're going to see a massive jump in debt. So I really wouldn't put that debt clean balance sheet as a true bullish case, because I think that scenario within the next 4 quarters will look completely different. Now, I kind of want to talk a little bit about the buildouts that they have. So right now, based on the most recent earnings from CoreWeave has about 33 data centers. And I know if the charts here are in physical.ai, but you can actually get a lot of these presentations very quickly with physical.ai and kind of the also the transcripts to be able to kind of digest a lot of this information there. So that's why I mentioned, if you're a long-term investor, definitely check out my code at physical.ai/Jose. Now here for CoreWeave, they have 33 data centers. They're mainly in the United States, but they are expanding in Europe. They have about 470 megawatts of active power. Active power is what they're building already. And for right now, they have about 2.2 gigawatts of contracted power. Now, in the recent events that CoreWeave was in, they mentioned by the end of this year, they're expected to have 900 megawatts of active power. That is a lot, and they're expected to double their current active power by the end of this year. So in about 2 quarters, that is going to help grow dramatically the revenue. Now for CoreWeave, it's definitely a little bit different. By the calendar year of 2025, they expect to have 220 megawatts of connected power. So connected power is a little bit different from active power. For Nebius, connected power is active power and power that's fully provisioned and can be activated immediately upon GPU installation. So it's what they have rented out in contract for right now, what they can provide, plus any form of power that they can, any form of GPUs that they can add if they get the contract. So 220 megawatts by the end of this year. Now, if you listen to their earnings transcript, they mention out that 220 megawatts of connected power. It's more about 100 megawatts of active power by the end of this year. So a very huge difference. CoreWeave by the end of this year is expected to be at least 9 times bigger in forms of active power. So again, you can continue to see the difference in sizes, but again, that already is considered in the valuation. Now, what else do we have here? We're also kind of comparing the two in forms of capital expenditure. Who is expected to spend the most? CoreWeave right now is expected to spend about $20 billion by the end of the year. Now, Nebius, on the other hand, capital expenditure this quarter was about $500 million. By the end of this year, they're expecting to be somewhere around $2 billion. So CoreWeave is expected to spend about 10 times more in capital expenditure. It's expected to have 9 times more active power than Nebius by the end of this year. And it's expected to have much more revenue than Nebius by the end of next year as well, and is trading at cheaper valuations. So this is why I actually do enjoy CoreWeave a little bit more. I do believe both can definitely benefit from this market, as both of them actually have some great partnerships with NVIDIA. Both of them are preferred players. Now, I believe CoreWeave is, if those two were kids of NVIDIA, which would be the favorite kid? I think CoreWeave is, because CoreWeave is able to build up these massive scales, massive systems at scales pretty quickly. And that is great for NVIDIA and for AI partners. We can see CoreWeave leads the way with first NVIDIA GP300 and DL72 deployment. Revenue backlog is increasing. And with Nebius, you get another aspect of it, right? With Nebius, you do get kind of like other businesses that come with it. They have a nice amount of investments in a company like ClickHouse, which is expected, it continues to see a growth in valuation. They also have other businesses like AV Ride and Tripleton. They have a great ecosystem, and like I mentioned, they have a great partnership with NVIDIA as well. Now, it's very hard, in my opinion, to determine which one is the better company. It's all dependent on what is your bullish case. For me, the bullish case for CoreWeave is this is a purely AI infrastructure build out, and it's going extremely aggressive. I'm also going to talk a little bit about their business model in a bit, so you can kind of see the difference between the two. But I believe CoreWeave is the massive AI infrastructure player. That's all it cares about. It only wants to be good at one thing. Nebius, wants to be good at a lot of things. It wants to be good in AI infrastructure, and it's also hedging its bets with doing other things like AV rights, like Tripleton, and like those equity investments. Nebius is a little bit of more like an ETF that has various AI approaches, and it can do well within itself. Now, personally, I own both, but right now I am extremely bullish about the AI infrastructure build out, and for that reasons, I'm very excited about CoreWeave. Now, I do have one more thing I want to show you. So it's kind of a slideshow I've created. A lot of people throughout the videos end up asking, Jose, what app are you using? It's just me collecting information and creating a quick HTML application with AI, so I can kind of show it to you, the viewers, a little bit better. But you guys are giving me maybe a suggestion. Maybe I should start making an app with this kind of information that follows a lot of AI companies. But that's for another story. So here, CoreWeave and Nebius, like I mentioned, both are critical builders of the AI infrastructures that pretty much power the AI market. But both of them are doing it very differently. In forms of global reach and local focus, CoreWeave is primarily in the United States, but it is expanding in Europe. And Nebius is primarily in Europe, but is aggressively investing in the United States. So both of them are, while have their main buildouts in other parts of the world, they're going to start to compete very quickly in the same markets. Now, CoreWeave's model is very interesting. It excels at building massive scale AI infrastructure at high speeds. Building these massive AI infrastructure at high speeds attracts a very unique set of customers, a very few, but very large AI labs as primary customers. That's why you see companies like OpenAI, right? They need those super huge AI clusters that CoreWeave can build and that they can build very quickly. They provide reliable bare metal compute for large scale training. Deals are high volume. We see these massive billions of deals with OpenAI, but often a little bit lower margins as these sophisticated AI lab companies require fewer add-on services. They're pretty much just looking more for like that bare metal compute that they can rent out for numerous years. So for CoreWeave, they're mainly focusing on those very few large AI labs. Now, with recent acquisitions, they're opening more into kind of the enterprise market, but their biggest market, in my opinion, will continue to be those very large AI apps. Now, Nebius, on the other hand, instead of just kind of being a pure bare metal, they are becoming this AI platform. They provide a comprehensive AI platform, not just raw infrastructure, but that customer base is a little bit different. It targets a broader base of enterprises and smaller AI labs. They offer more managed services and supports, leading to higher margin business. The customer base consists of, I wouldn't say super small spenders, but a lot smaller than CoreWeave. In my opinion, I like CoreWeave's model the most. I believe that there's only going to be very few AI winners, and those AI winners are going to be spending billions and billions of dollars. I'd rather CoreWeave being the best at what they do, attracting very few large customers, than the Nebius approach where it's all dependent on how the enterprise market is adopting. Again, eventually, both with acquisitions, they're going to start to compete in similar spaces as well and try to fight for each other's customer base. But I think right now, this is where the huge difference is. And I do believe right now, the market moat is the primary competitive moat in AI for infrastructure is the ability to build reliable infrastructure at scale and speed. This is because the demand for GPU compute far outstrips the available supply. If you are a major AI lab, you don't want some other AI lab to get compute before you, making execution and building up these AI infrastructure at scale the most critical factor for success. Now, that is why I personally enjoy CoreWeave the most. Again, I can also understand why someone would pick Nebius. I like both, but in forms of position sizing, I think CoreWeave's position in my overall portfolio is closer to 8 times bigger than Nebius. And right now, I'm really focusing on CoreWeave. Now, I do want to say with that massive debt, it does come with risk, right? If there's any slowdown in the AI market, having the aggressive play of CoreWeave can backfire a lot faster than it can for Nebius, right? When you are extremely leveraged, that is one of the major risks. But I do believe, I don't know, something in my gut. You guys know I follow NVIDIA very closely. NVIDIA is very well intertwined. And I'm not just talking about actual position or equity holding. The way anytime NVIDIA releases a new product, CoreWeave goes with it. And I do believe that will be a strong moat in this AI market, even though it doesn't seem like one. So I hope you guys learned a lot more about CoreWeave and Nebius in this episode. Again, I do believe not many people are explaining the difference between active power and connected power. Most people don't know the difference in sizes. We saw the huge difference of size in active power available by CoreWeave and Nebius just in this upcoming end of year. So take care, have a good day, and see you all next time.